Hey there! Welcome to today's video, where we're diving deep into the world of investing. If you've ever felt overwhelmed by the idea of investing, you're not alone. The stock market, portfolios, dividends, it can all seem like a foreign language. But trust me, it doesn't have to be that way. This video will break everything down in simple terms. We'll cover why investing is critical for your financial future, how you can start investing with as little as $5, the best beginner-friendly platforms, common mistakes to avoid, and some golden tips to set you on the path to wealth creation. By the end, you'll have the knowledge to confidently take your first steps toward building a brighter financial future. Ready? Let's jump right in. Part 1. Why should you start investing? Let's begin with the big question. Why bother investing at all? Why not just keep your money in a savings account or under your mattress? Reason number 1. Inflation is your silent enemy. Inflation eats away at the value of your money over time. Imagine you saved $1,000 in cash today. In 10 years, thanks to inflation, typically around 2 to 3% per year, that same $1,000 might only have the purchasing power of $800 or less. Example: let's say a gallon of milk costs $4 today. If inflation averages 3% per year, in 10 years, that same gallon could cost over $5. Solution: investing allows your money to grow faster than inflation, preserving and increasing your purchasing power. Reason 2, the power of compounding. You've probably heard the term compounding, but what does it really mean? Compounding happens when your investments earn returns, and those returns are reinvested to earn even more. Example: imagine you invest $1,000 in a fund with an average annual return of 7%. After 1 year, you'll have $1,070. After 2 years, $1,140, not just $1,140 because you're earning on your returns too. After 30 years, that same $1,000 grows to $7,612 without you adding a single extra penny. Reason 3. Achieve financial freedom. Investing gives you options. Want to retire early? Travel the world? Spend more time with family? By growing your wealth, you can afford to make those dreams a reality. Pro tip: start early. The earlier you invest, the more time compounding has to work its magic. Part 2. Overcoming the fear of investing. A lot of people hesitate to invest because of fear. Let's tackle some common concerns head on. What if I lose all my money? This is a valid concern, but here's the reality. Losing everything is unlikely, especially if you invest wisely. Example: investing in a single risky stock like a small tech startup? Yes, you could lose a lot, but investing in an index fund like the S&P 500, which tracks the top 500 US companies, that's far safer. Even during major downturns, like the 2008 financial crisis, the market eventually rebounded. Pro tip: diversification is key. Don't put all your money into one company or one type of asset. I don't have enough money to start. Good news: many platforms now allow you to start with just $1 or $5. Gone are the days when you needed thousands to open an account. Example: platforms like Robinhood, Acorns, or Trading 2 to 12 allow fractional investing. This means you can buy a small slice of a $3,000 stock for as little as $5. Part 3. Choosing the right platform. The next step is deciding where to invest. With so many options out there, it's essential to pick one that matches your needs as a beginner. Option 1 button. Vanguard, known for its low-cost index funds and ETFs, exchange-traded funds. Great for long-term investors who want to set it and forget it. You can start with as little as $100. Example: a popular Vanguard ETF is Vanguard Total Stock Market ETF, VTI. By investing in VTI, you're essentially buying a tiny piece of thousands of companies across the US. Option 2. Trading 212, user-friendly and ideal for beginners. Allows you to invest in individual stocks, ETFs, and even practice with virtual money. offers a pie system where you can copy expert portfolios. Option 3, Robinhood best for those in the US looking for commission-free trading. Excellent for buying individual stocks and ETFs. Pro tip, before choosing a platform, check for hidden fees. Even small fees can eat into your returns over time. Part 4, what should you invest in? Now that you've chosen a platform, what should you actually invest in? Let's explore your options. 1. Index funds and ETFs. These are baskets of stocks that track a specific market index. They're perfect for beginners because they offer instant diversification. Example, if you buy a share of the S&P 500 ETF, you're investing in 500 companies, from Apple to Amazon to Coca-Cola, all in one go. 2. Individual stocks. Buying individual stocks can be exciting, but it's riskier. Stick to companies with strong track records and solid fundamentals. Example, Apple, Microsoft, or Johnson & Johnson. These are companies that have been around for decades and consistently deliver profits. 3. Bonds. Bonds are like loans you give to a company or government in exchange for regular interest payments. They're safer, but offer lower returns compared to stocks. Part 5. Building wealth consistently. The key to successful investing isn't timing the market, it's time in the market. Consistency matters more than anything else. Strategy number 1, dollar cost averaging, DCA. This strategy involves investing a fixed amount of money regularly, regardless of market conditions. Example, if you invest $100 every month, you'll buy more shares when prices are low and fewer shares when prices are high, averaging out your costs over time. Strategy number 2, reinvest your dividends. If you invest in dividend-paying stocks or funds, reinvest those dividends to buy more shares. Example, if you own shares in Coca-Cola and they pay you $50 in dividends, use that $50 to buy more Coca-Cola shares. Over time, this accelerates your portfolio growth. Part 6. Common mistakes to avoid. 1. Trying to get rich. Quick investing isn't gambling. Avoid chasing hot stocks or trends like meme stocks or cryptocurrencies without proper research. 2. Not having a plan. Set clear goals. Are you investing for retirement, a house, education? Your goals will determine your strategy. Investing can seem overwhelming, but remember, the most important step is starting. Begin small, stay consistent, and educate yourself along the way. If this video helped you, drop a comment below and share your biggest investing goal. And don't forget to check out this related video on dividend investing to keep learning. Thanks for watching, and I'll see you next time.